going?
Good.
We were due to do that for a long time.
Yes, finally. I think we are streaming on 21st Cap and 21st Cap YouTube. 21st Cap YouTube, 21st Cap Twitter, but not
Yes.
on Sina's account, which is fine. It's okay.
Yeah, that's awesome. Awesome.
That's fine. So plan for today, Renault, as we discussed, let's talk Bitcoin, let's talk liquidity, let's talk about the latest report you released. I just opened it. Amazing work what you've done here. So I would just say I will just ask you some random, very dumb questions about this report. And you just boil it down to me as if I'm a 5-year-old. And we're going to talk about that. And we're going to talk about the effects of what we will talk about on Bitcoin. Okay.
Yeah.
So one thing that you keep saying in a lot of the reports that you produce in 21st is the repo market or repo in general, right? So why don't you explain what repo is, why it's important, and what it actually does, and we take it from there.
Got it. Pretty simple. Let's say you want to borrow some money from your friend, right?
Mm-hmm.
And you're like, hey, I need 50 grand. And he says, yeah, how can I make sure you're actually going to pay me? Hey, look, I'm a friend. You know me for a while. You know me for many years. So I have some reputation going on. You can trust me, right? That's one thing. But the guy said, yeah, not quite. Last time I borrowed you money, you actually didn't pay me back. Or at least, yeah, but, I'm still your friend, right? So, okay, now I actually gonna borrow you the money. But how about this? Give me your car just in case you don't pay me.
Mm-hmm.
Put that as collateral. In case you don't, I just sell your car and we're quit. What is your car like? 100 grand? Perfect. So I got at least double that amount. So I got collateral. Make sense?
Mm-hmm.
So that's basically what repo is, but between banks. The problem is for a bank to trust each other, they have a history that was going on, especially before 2008. They would just trust each other. And that still happens. However, it's very low. Now it's less than 20% of all transactions between banks are because they trust each other or they have a history. So they actually have a much better way to distribute money, which is let's get a collateral from you. But what should I get from you? Should I get commercial real estate? No, I mean, tough. Should I get, I don't know, gold? You could, but it's hard to move it. That's how the market actually decided to say, look, what is pretty liquid? Everybody wants. I can get rid of that at any time and trade for dollars back and forth. And they decided that treasuries are the way to go. So instead of I getting your car as collateral, I just get US bonds because I transfer the risk of you not paying me to the US government who prints the dollars. So that's basically what it does. So what I do is, hey, I need $1 million borrowed from you. So
You're
give
now a
you
bank. You're the bank, right?
both of those are banks. I'm bank
Okay,
number
so
one.
let's call me Bank
Yeah,
of America, and
exactly. I'm Chase, your Bank of America, let's say, right?
okay.
Or
Let's say I'm Bank of America, and you are Goldman Sachs.
okay, I'm Goldman Sachs. And then I say, look,
Yes.
I'm going to this is very, very simple because it's way more complicated than that for sure. But just so you know the gist of it, let's say I need $1 billion from you. And you say, okay, post that collateral. So I bring you $1 billion worth of treasuries that I have on my balance sheet. And then I said, you know what? I'm going to buy them back tomorrow. So you gave me the $1 billion. I gave you $1 billion worth of treasuries. But tomorrow, I'm going to buy them back from you for a little more than $1 billion, just a little more. It's me selling, and then I repurchase it back from you tomorrow. Repo. purchasing agreement.
But
It's
why does the bank do that? Because it needs the liquidity overnight?
Yes,
I
exactly.
see.
Because
Okay.
banks are all they are. It's just an entity that matches duration and transactions. If I borrow money at this duration of 3 months, I need to make sure that I can lend that also for 3 months, and whatever I lend is higher than whatever I borrow. That's how I make money.
Okay. But the repurchase can be longer than a day, right?
It can, but those are just it's a think of it as the electron and the proton. It's just like yin and yang. It just shifts all the time, back and forth, back and forth.
So let me summarize. There is a market between banks, right?
Yeah,
Where banks that are in need of liquid money, which we call liquidity,
yeah,
use their collateral, in this case, US treasuries, so debt of the government that they hold themselves. They give that as collateral. In return, they get cash, liquid cash. They borrow that. And just the next day, they purchase the same bond that they lent out the day before. They purchase that back. And the reason they do it is because they need the liquidity for the time being, right?
yes, exactly. For all the
So what do
transactions.
they do with that? What do they do with that
All kinds of
liquidity?
things. It's like blood. It's like blood circulating, because at
Mhm.
the same time you can use that cash to purchase other stuff. You can lend to other people who are doing repo with you as well, and you do repo for another repo. It's a whole yin and yang with trillions of. It's the amount of money that is transacted every day. It's between $7 to $10 trillion per day. It's basically how everything flows in the monetary system. This drives liquidity. and
Wow.
and the mind-blowing thing is that you may think, look, everybody's concerned about the US and the $37 trillion debt. This is going to explode. We talk a lot about that in the Bitcoin community. But the mind-boggling thing is the collateral that is actually needed, it's much higher than the supply, because every time you get credit, you need to pay it back plus interest. So mathematically, you need more money to pay for existing debt. Unless, otherwise, you create deflation. You create a deflationary spiral, which kills the
Obviously.
system. So it needs
Yes.
to keep growing. But the problem is, not every treasury that the US issues is great. You have better collateral. Then we have what we call pristine collateral, which is the creme de la creme, right? The best of the best, which is T-bills, short-term bonds from the US, and fresh bonds, what we call them on the run. So they are recently fresh, coming out of the oven. And why is that the most desirable asset on earth for banks? Because it's stable. The price doesn't swing too much. If you have a 30-year bond, this swings way more because you have no clue what's going to happen to the US in 30 years. But like a 4-week T-bill, that's pretty safe. Everybody wants that. It's like you can sell to anyone on earth right away without losing any value, right? It's like when you have an iPhone, for example, a brand new iPhone, and they still hold value for some time, but you can still sell them. So it's you can make that money back pretty easily. And the more stable it is, the better the collateral it is, the more you can leverage on it. That's what banks do. They leverage on top of that. But the problem is there's not enough for everybody. So they relent to other people. That then it becomes more complicated. But that's basically how it works.
Okay.
That's 80% of.
Let me ask you a question. You write in pretty much at the beginning of the report that you published today on the website. You say when repo rates spike, it is not just a market anomaly. It is a signal that liquidity is tightening offshore. These repo spikes are small tremors in the global liquidity fabric, suggesting that dollar funding outside the US is becoming slightly more expensive. What do you mean by that? So
Okay.
can you explain that as if I'm a 5-year-old? And also
Okay.
this chart here, this line here, scarcity warning. Then
Yeah.
you show the spread, and basically that's, I guess, the activity of this lending and borrowing between the banks that either tightens or eases, I guess.
Let's
So
do you want to put that on the screen, because I'm not sure that people are actually seeing
actually,
what we
I am putting it.
Okay. No,
Can't you see it?
now we are. Now we couldn't see that, but now we can.
Okay, now we can.
Okay.
Perfect.
Yeah. So basically, what is that? We have people think we have one single dollar,
Hmm.
a currency. We actually don't. The dollar is a little different than everything else. We
Yes.
have the onshore dollars, which is controlled by the Fed, and you have bank. It's overseen by the Fed. But as soon as you send a wire to Dubai, to France, to Japan, then it disappears. It's out of jurisdiction. It's what we call the euro dollar system. The dollars
Yes.
outside of the United States, right? It's nothing to do with
So
Europe. It's just a name.
just exactly, I just wanted to say that it's a little bit confusing for a lot of
Yeah,
people when we talk about the euro dollar. The euro dollar has nothing to do with the euro. It just means that dollars that are in existence outside of the United States, they're called the euro
exactly.
dollar.
Exactly. You also have euro yen, yens outside of Japan, or euro euros. So you can do the same thing with everything. So it's the euro dollar is the most well known. Basically,
Hmm.
that system has a much different approach than within the U.S. Because in the U.S. there is a privilege that nobody else has, which is when government spends, they create more money. So
Hmm.
this goes straight into the economy. That's not lent into existence. That's created from spending into existence. It doesn't come from taxes. Taxes do not fund the government. It's all about the government spending, that it's actually the true printer within the US.
Hmm.
But there is a second way of printing dollars, which is bank lending. Also, they don't need your deposits to lend. They create
Hmm.
lending out of existence, new dollars that come in. But this is different than the government, because when a bank does it, it needs to get paid back, because otherwise you create a hole into the balance sheet. That's how banks go down. You have to have a match, right? There is risk involved. With the US, that risk doesn't exist, because you are the issuer of the currency. So
Hmm.
when you are outside of the United States, the only way to create more money is to either trade, right? We trade between countries and we get those dollars selling products, which is great, or you lend it into existence to existence into to companies, to other banks, and so on. So some banks, that's where we see the differences. It's easier to get bailed out if you are in the United States, because if you have a US entity, it can have an account straight with the Fed or the Treasury,
Yes.
right? So it's an easy way. But most banks offshore don't have that privilege. They
Correct.
need to rely on repo to get that credit. It's more of an indirect way to get dollars. And when you see the cost of that money, which is the interest rate, outside of the US using collateral, just describing like repo, that's what we call SOFR. That's in green over there. That's that interest rate. When we have the other one, which we call IORB, what that means is basically it's the Fed. When you have a straight relationship to the Fed, you can have the Fed pay some interest on money that you give them. I'm trying to be very, very simple. It's more complicated than that. It always is. But IORB, it's straight with the Fed. SOFR,
Mhm.
it's outside of the United States. If you have an
So,
equilibrium,
so if you're a bank outside of the United States, obviously you cannot get bailed out directly by the Fed,
not
right?
directly,
Not
indirectly.
directly. So what happens in this case? The banks inside the United States get the bailout money, and they then lend it out in the repo market to banks outside of the United States to bail them out if they want to.
They can. Sometimes they have a
Yeah.
subsidiary, for example, right? Deutsche Bank
Hmm.
has a subsidiary in New York, for example. So those kinds of things. But the idea here is, why do we see that graph? Why is that interesting as one of the indicators to see if
Mhm.
there's tension between those two worlds? If the cost of borrowing through repo gets too different from the cost directly with the Fed, that means that people outside of the US are struggling a bit. Does that make sense? So you
Yes.
take one and subtract the other. That difference gives us a hint. A repo is not flowing that well. Maybe the oil of that motor is a little bit thick. Something is happening. We don't know exactly why or what is happening. We only know that something is happening because there is no jurisdiction in the Eurodollar system. There is no country that controls it. Actually, this is a little bit sad for Bitcoiners because the actual first decentralized currency is actually the Eurodollar system, because
Yes,
banks
yes.
created that, right?
Not many people actually
Not,
know that. So
yeah,
that's why we always advocate against. We always speak against CBDC, right? So the current financial system is actually, as much as we hate it, and we should, it's actually not as centralized as many people describe it, right? Because you have lots of banks, and each bank individually decides on its own decisions, right? But a CBDC, a central bank digital currency, would essentially, well, it depends how you design that, but it would essentially circumvent the retail bank, or uh, the registered bank, in a nutshell, and it would give a wallet or an account directly to customers, right? So instead of you actually needing to go to the bank to open an account, you could actually use a direct wallet of the central bank. And that will obviously give the system way more control to censor, way more control to print, way more control to control inflation, deflation, much more control to the central bankers than they would have right now. Right now, they don't have that. Um, um, they don't have that uh, privilege. 1 second, sorry.
yeah, yeah. But just to add to
Yes.
what you just said, actually, even if they try, you see that many of those attempts of CBDCs, they fail. And not because they are the good guys, or if we because we
Yeah.
passed legislation like the Trump administration did to forbid them, right? But even China tried it, and it actually didn't work pretty well. There is a difference between what we want to do as a government and the actual technology to pull it off,
Yes.
because you have decades of technological advancement that came from the market, the financial market, that evolved the Eurodollar system over time. So a lot of innovation is actually happening the same way we see right now with people who are like they claim on DeFi or whatever, lending or borrowing, or this is already a concept that we see from Thread 5 from decades. This is not
Decades. Yeah,
new.
nothing new.
This is
Nothing new.
There is absolutely nothing new. So
Yes,
this
but
is
the
already happening
shitcoiners are
with the
going
banks.
to the shitcoiners are trying to sell their coins. So that's why they want to sell it as something new, right?
Yeah. So
Okay, very interesting. So in a nutshell, the spread on this chart basically shows the difference between the rate at which banks inside the United States are lending each other, and the rate outside of the United States at which they are lending each other money. Correct?
yeah, yeah. And if they're close or pretty close,
Mm-hmm.
not really a problem. Everything is going well, no hiccups. But if it starts to go up or even cross that threshold that our friend Conks does it as a reference weight for you to see if there is scarcity and what we call scarcity reserves. So that means that what would the problem happen at all? You don't have
Mm-hmm.
just enough cash to fulfill those repo orders. Maybe I give you the collateral, but next day I don't show to come back for it, and you keep
Mm-hmm.
it because there is a little bit of a struggle to get enough dollars to actually serve all those outstanding debt outside. It's a game of chairs. Maybe not all of the chairs are going to be available for you.
So let me ask you a question. If I am a bank, let's say I'm an offshore bank in, not offshore, I'm a bank just outside of the US, right?
Yeah, yeah, it's
And
offshore.
I am offering accounts to clients in all sorts of currencies. The moment I actually offer a USD account and I basically credit that account with some money for a client, I'm the bank right now, okay? That dollar that I credited is actually a euro dollar amount, correct?
Yes, yes, and there
Okay.
is also some limitations based on when.
Okay, so because I had this discussion with somebody, and we had this tough dialogue or debate, because he was saying no bank that is not licensed by the central bank in the United States is allowed to print dollars, which is nonsense, right? So even if you are outside of the United States, you still can create dollars, correct?
Yeah, I understand where he's coming from. It's a yes and a no at the same time. And why is
Okay,
that?
please explain.
Yeah, exactly. If I'm HSBC, a UK based bank, right, one of the biggest in the world, I am able to produce dollar credit for interbank. But if a UK citizen just wants to come into my branch in London and say I need a USD denominated account, he probably not going to get it because it's not under UK regulation. It's pounds. But you need dollars to create transactions into the Eurodollar system. If you're a UK exporter and you want to sell to Japan, you can't just go with yen. It's no use in London, and also in Tokyo it's no use of pounds. That's why you need that intermediary currency that is available and desirable everywhere, which is the Eurodollar system. And the HSBC is going to do that transaction, what we call forex, right? So you're going to trade those, you're going to make that contract with that private party. That's how they're going to source dollars. Of course, some forex brokers are able to open like a USD denominated account for people that this guy that there's some intrinsicacy there, because many of those are just registered in Cayman Islands or whatever in other offshore places. So it's a very complicated, and it's a Frankenstein system, as we call it. So it's not something that is unified. Every single country has some limitations. Brazil, for example, would not allow for anyone to just hold dollars within Brazil. Now there is law that allows for banks to allow for those kinds of accounts. So it might depend on local jurisdiction, but you always need that intermediation to have access to the Eurodollar system. This
Okay,
defines currency.
let's actually translate this discussion to actually what it means for financial markets. Okay,
Yeah,
so why is this so important? Why do we need to care about the liquidity among banks for financial markets like Bitcoin, gold, or stocks, or anything that goes up or down in value, right?
perfect.
Where can we make a bridge where it's either bullish or bearish for financial markets, if you will?
Perfect.
And
Because
let's not distinguish between risk on and risk off, because that's
yeah,
that's a, that's a different story, right? That's a sentiment, and a subjective thing in people's head or investors' heads. What do they see as risk on and risk off? And it adds more confusion. Let's just bridge the discussion we just had about liquidity between banks, the repo market, and the financial markets.
got it.
When is it bullish and when is it bearish, and why?
Okay. The big money is the interbank money. That's where the big money is. So it creates a tide that it's much higher than retail. Retail
Mhm.
can participate, but nowadays it's much more of how much liquidity is generated, because that liquidity needs to go somewhere. Banks do not sit with cash just parked in a checking account somewhere. That's not how it works. It's not like us, like we could do. They need to have it invested anywhere. Hedge funds need to do that. So it needs to go somewhere. And because of the flow of investments coming from those entities, they just send it all over the place, to the stock market, to Bitcoin, to bonds, to even to gold nowadays. But everywhere it receives money, because it's all about arbitrages. And if, as an investor today, you're rather, at least as a macro investor, and that's my framework, I much rather understand how liquidity is actually generated and how healthy the system is, because the more I swim with the tide where the currents are actually going, of the big money, I just want to be on that side. So I'm not trying to predict what the best option is, or if Nvidia is going to go up, or if Microsoft has sold more computers, or Apple sold more iPhones, but just see, are we seeing a lot of flows coming from everywhere into the S&P 500, for example, which is a very passive way. You don't pick the winners. But how do you, so that's liquidity. That's how liquidity is translated. But how do you know if we are prone, if for more liquidity, or if it's a bad situation for liquidity? We need to understand how healthy repo is. So when we see, for example, go ahead.
Reno, just a quick question in between. Sorry, I didn't mean to interrupt, but just I think for the audience and for myself,
Yeah,
I think
go
that it
ahead.
would be very, very helpful. Can you explain the flow of money? So we
How
just
long do we have? Just
uh
kidding.
no, no, no. I'm not talking about the flow of money in general, but the flow of money that relates to this liquidity that you keep hammering on, right? So repo,
Okay.
you just said it yourself. Bank A needs cash. Bank B has treasuries. Bank B gives Bank A the treasuries, and Bank A lends the other bank the cash,
It,
right?
it,
How does the money reach the financial market then?
you don't have like an X-ray machine to go exactly into the bank and see exactly what it does, but you can see, look, that bucket has been filled. Somebody has filled them, right? So you
Mhm.
see that probably it's what they're doing right now. So you cannot see the patient. You can only see the symptoms. So I'm gonna give you an example. Let's
Because it's a
say
black box, right? What
it's
they
a black
do
box.
among
You
each
don't. It's
what
these are private balance sheets, and they're
mm,
pretty obscured. Sometimes it's just the little text in the very bottom of a statement they release every quarter. You don't know. That's the thing. You just
mm,
know that it goes or it goes up, right? But just to give you an example,
mhm.
I'm a Japanese bank, and Japan, a lot of deflation, not really anything going on, but the US is pretty attractive. And another thing that's pretty good is that the yen is weak, the dollar is strong. Why don't I take a credit? I gotta borrow yen, which is cheap, and it's probably going to become cheaper in the future, and get that money, and then I just trade that for dollars and buy the S&P 500, and I'm going to borrow pretty cheap because interest rates in Japan are so low. But now
Mm.
the US is pretty attractive, and I'm going to
That's the
make that
carry trade.
arbitrage.
That's the famous carry
Exactly. You
trade.
just defined the carry trade. That's one current,
Mm.
for example. Another current of passive inflows that happen inside of the United States are workers. You have your paycheck coming in every 2 weeks, you get a chunk of that, goes straight into your 401k account. Your employer has a match. Whatever I put in, my employer does that. Goes straight to the S&P 500. I'm not thinking about anything. I'm working. I don't care. It just goes and buys. This is a passive inflow of billions of dollars every couple of weeks in America. And then you get those two flows combined, it's a lot of liquidity. But those are different currents. It doesn't they have different reasons of happening.
Mm.
And so macro is just about seeing, okay, what are those big currents? Can they change the tide a little bit? Some are more positive, some are more negative. and you see what the counter current is going to be. Now let's get to Bitcoin, for example.
Yes.
Bitcoin is getting better and better as becoming, and my macro framework. So I'm coming from macro. I love Bitcoin, but I'm a macro guy. I want to understand why, what is currently happening. Bitcoin is becoming big enough, even though it's pretty small macro wise. It's still an infant. It's one of the biggest assets.
It's a child.
It's a child.
It's a teenager.
It's a yeah, getting to the teenager, exactly.
Yeah.
So, but it's becoming more and more as a macro asset and a barometer for liquidity. Why? Because at the very beginning, not a lot of people knew about it. Just a trade, cyberpunks, whatever, and then that's just speculation, right? That's just a play. That's like as if it was a meme coin at the very beginning, right? It's just casino. But as soon as we have institutional money coming in, and now we have it listed, now we have ETFs, now we have it really as something official that you can see like on CNBC talking about it, and governments acknowledging, and all the things, it became an asset. It is an asset class of its own. You cannot go back to anywhere. It's already there, especially after what happened to the United States with the whole framework. Now when you see the Bitcoin price action, you see parts of it that are like gold that you wouldn't see before. You see still a lot of the risk on, risk off, as you said before, right? Sentiment, if you're bullish or bearish, if it's like a trade as if it was another tech stock or whatever. You certainly have a component of that. Actually, Cross Border Capital has done a pretty nice work on that with the chart saying like around 20-something% of the price of Bitcoin is just that sentiment. But almost over 60% of the price of Bitcoin is just liquidity. If liquidity is there, Bitcoin is gonna be a sponge of that liquidity, like gold is doing, like stocks are doing. So the regardless of fundamentals are there. It's never been safer, but it's about the liquidity that is able to go into that asset. So it is actually helping. So it has been a great hedge if you want to protect yourself against debasement, for example, because you have no control of the entities that produce more dollars. That's why you have to invest by definition, right? The fiat system is made for debasement. That's actually not in malfunctioning. This is actually by design, right?
So this for me, this presentation of 30 minutes straight from Renault and my questions, I think is the perfect explanation how the fiat system actually works, right? Because many people have this belief that the central banker, Jerome Powell, sits there and he presses a button and there is new currency starting to flow around the world. That's just not how it works. They have some tools that they can play with, like the interest rates that they control, at least the key interest rate that they determine. And there is obviously also the treasuries that they can purchase or sell in secondary market that can also influence the liquidity in capital markets, more or less. Indirectly. But everything else is actually among banks, and the Fed has absolutely no control and cannot influence. It's much more that they control the sentiment. So through these speeches that they do on a regular basis, they try to control the narrative, whether we are seeing more inflation or less inflation. So, I mean, this is a famous quote of Jerome Powell himself. I remember him saying a few years ago, not sure when exactly, but it was in one of his talks when the interviewer asked him what he thinks about inflation. And he talked about inflation being purely subjective. So if you think inflation is 3%, and we talk about it being 3%, then probably inflation is going to be 3%. So they try to control the narrative in a way that expectations will basically determine whether the market is inflationary or deflationary, which is actually scary. If you ask me, it's actually really, really uncertain and scary, because they cannot control what people think, right? They can only try to manipulate what people think. That's why central planning doesn't work. That's why free markets win, and prices are so distorted and not real. But that's a different topic. That's the Bitcoiner, hardcore Bitcoiner topic. That free market capitalism is in my opinion, a much better system than a controlled system or a narrative-based system of a central bank.
Oh, I agree for sure. That's my stance as well.
Exactly,
The,
exactly.
the only thing I might add is my on the work I try to make. It's the problem is when you describe the system and when you explain maybe how the dollar is actually a little more powerful than we think. It creates the impression that I'm actually defending the system, which is very different, right? Describing is pretty different than defending the system or saying that Bitcoin is not a solution for anything, or if the dollar is just going to be no, not at all. Because understanding the problems with the actual system help you as an investor to be positioned and actually use Bitcoin to your advantage, knowing that look, I cannot change it, but I can also not control the timing of anything happening, because it can't. Maybe it outlasts me, right? Maybe the three other generations are still going to see the dollar around. Maybe it's just going to be another 10 years. I cannot control that, but at least I know how it works, and I can be positioned for whatever happens, more into than just predict or just be a cheerleader of a specific narrative.
You know, the way I think about this, Renault, is actually there. I think of things that are almost certain. Nothing in life is 100% certain, that we know, but things that are almost certain, right? What are the things that I know that are almost certain? What's almost certain is that there's always going to be more dollars.
Yeah,
right? That
that's right. Like death and taxes, right?
Exactly. So. I mean, and you just go deeper and say why. Like, why is there more dollars? It's not very simple, right? It's not like there is one central banker, he presses the button and there's more dollars. That's not how it works, right?
It has to have more dollars, otherwise it collapses.
Exactly.
It's by design. It's not a flaw.
That's by design. So we know that there's always going to be more dollars around, because the system is literally based on debt, right? And if it is based on debt and we have less income to pay that debt back, that means in essence that there has to be more dollars created out of nothing in order to pay that debt back, and hence devalue the dollar, so the debt burden is less of a problem, right? So that's for me, that's not something I need to believe. It's not something I need to. It's just an understanding. It's just a realization, right? It's not something that I need to have faith in. It's just certain that we know that the dollar is not backed by anything. It's just backed by debt, right? And because it's backed by debt, it needs to devalue over time. That's one thing we know. We also know that there is not going to be more than 21 million Bitcoin forever. So if you just make the math and look at what's happening in the fiat system and what's happening in the Bitcoin ecosystem, you come to realize that it's actually the perfect tool to make sure that you cannot lose essentially your money, right? Because if you want to save money, if you saved money in the past 20 years just holding dollars, you probably know the number better than I do, but you lost a lot of purchasing power, right?
Yeah, the famous hurdle rate that.
Yeah, I mean, in the past 50 years, the dollar has lost how much? 98% of its purchasing power, right?
Yeah, that there's just one thing that it would add into it,
Yes.
and I agree with you. Don't get me wrong. I agree with you. The only thing that could give a little bit of context is that automatically we focus on the dollar. And I totally understand it devalues over time, but also most people, especially in the Bitcoin community, would just dismiss the difference between the dollar and the other currencies as if they were, oh, it's just less. It devalues, but it devalues a little slower than everybody else, but it's still the same thing. That is the part that I changed my mind a little bit based on how the system is actually done. Because
Explain.
before us being concerned about the dollar, the system is done in such a way that every other currency just became a dollar derivative. So for the dollar to collapse, and it will, but first, by definition, the rest of every other currency on earth has to collapse first. And this is very important because this is a way that every other country can only value their own currencies based on the dollar, not as convenience, because the dollar is the only currency by far, and it's not even close, that is everywhere at the same time, available for everyone. So you can only give the how much the euro is actually worth, the actual euro currency, based on how many dollars they can purchase. Same thing for the yuan, same thing for the yen. It's not just the whole banking system is denominated in dollars. And even Bitcoin, I hate to say it, but even Bitcoin, at least for now, we can for sure we can say, yeah, hyper Bitcoinized world, how many sats it buys. I totally agree. You can do that with gold, you can do it with many assets. But the thing is, for the system to collapse, it's going to require more dollars in the future, and countries that are not called the United States of America will need to source them in the future to serve the debt that they already have outstanding. That's the dollar trap. That's why the
A
US can
milkshake theory, right?
that's basically the milkshake theory, and Brent Johnson explained it pretty much better than I do. But why is that important? Is because that need of dollars to service the whole thing keeps everything together. And it's a web that gets stronger and not weaker over time. But it has an end. But the problem is, it has an end where the dollar goes up and not down. And many people, for example, on this, everybody's talking about the debasement trade. Oh, the dollar just lost 10% of its value, 15% of its value just in 2025. Not really true. The problem is, compared to other currencies, the dollar is weaker, but it does not mean that the dollar is dying. It's actually the opposite. The dollar is just becoming more liquid, and it's easier to serve that debt. However, once the pendulum swings back, countries are going to struggle to service those dollars. They're going to need more euros to buy a dollar. They're going to need more yen to buy a dollar. And that is when I am concerned. When the dollar gets, let's say it gets 1-to-1 to euros, then oh my God, that's a problem. That's how I measured the DXY, for example. Right now it's pretty low. Now it's 99. It went a little back. We're still tracking that.
DXY, just for the audience, is a basket of fiat currencies measured in terms of US dollars. Essentially, the most important ones: the GBP, the euro, the Canadian dollar, the Japanese yen, the Swiss franc.
Exactly.
And
A
did I miss
basket of
any?
the main
Canadian dollar as well, I think.
Canadian dollars, exactly.
Yes.
Pounds and so on. So
Yeah.
when the DXY goes to 80, 70, that's not what I'm concerned at all. Dollars are plentiful. That does not create a problem. It's actually not even de-dollarization. It's the opposite. It's dollarization. The problem is then you cannot serve it. Then then you understand why currency exchange rates are the actual interest rate. That means, what is the price that I as a Canadian need to pay if I want to source dollars? How many of my Canadian dollars am I going to need to be part of the Eurodollar system? How many euros am I going to need? And my thesis as well would be that over time, you're going to need more and more and more, which creates a huge problem outside of the United States. and also a problem to the United States as well. Everybody, nobody wants a
Because
strong
they're all
dollar.
trading partners, right?
Exactly. Yeah, and you also need to service that dollar denominated debt. The U.S. also has an interest of the dollar going lower, not higher. But when
Yes.
it goes higher, that is the de-dollarization process. Because if you don't have enough dollars, you need something else. You need
Yes.
to. Hey, what
Yes.
do I need? But see the
That's why
problem?
that's the Triffin's dilemma, right? So
Yeah,
you have the United States that actually has a conflict of interest. It needs to protect its national interest, and it needs to make sure that its currency is 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 uh, is stable inside
and
the country,
available everywhere.
available everywhere. But at the same time, it needs to make sure that it doesn't have the same situation outside of the US, right? So essentially, what the US does, and that's why the US is in such privileged position, right? They can print much, much, much more money because their currency is demanded everywhere. It's not only demanded in their own country, it's demanded everywhere. So, in essence, they're actually exporting the inflation that would otherwise stay inside the country. There is this gold bug. What's his name? I forgot his name. He was
Mike Maloney,
yeah, Mike Maloney, exactly. Mike Maloney, his series of
the hidden
um,
secrets of money.
the hidden secrets of
He got
money.
me into
I
gold. Yeah.
Yeah, actually, I got to watch that series before I was even in a Bitcoiner, like a hardcore Bitcoiner, and that series was part of my orange pill journey. That
Yeah.
guy,
Chapter
exp-
4, central bank,
yes,
the biggest scam on
that
earth. Highly recommend it.
exactly. That guy explained this phenomenon so simple and
Yeah.
so easily to digest. Where I had this aha moment. But what he also says is like, what happens when all these dollars come back to the US?
Yeah.
What happens when these dollars that are being exported come back to the United States? Then the US has, all the inflation inside the
I
country.
get, yeah. He has that argument. He changed a little bit that stance over time because of how complex the system is, because
Yes.
that assumes that everything is just going to come back to the US because nobody wants them anymore. The problem is the ability of banks to actually produce dollars outside of the US and demand those dollars to serve the interest outside of the US. So that creates a demand out of the US as well. And it's also creating a second problem. That's the counter current. One current is everything coming back to the US, and it comes to the US, especially for financial markets. That's
Mhm.
why the S&P is so big. That's why
We have
uh,
liquidity coming in.
yeah, exactly. Because
Yes.
everybody else recycles their dollars here. So if you're a
Mhm.
Chinese exporter, you get those dollars as an exporter. What do you want to do with them? You want to invest them. Then you send them back to the US. You buy bonds, you go to S&P 500, and you recycle those. That's what. But the price for the US to pay is trade deficits. They need, by definition, to have a trade deficit in order to serve those dollars outside of the US. Otherwise, you strangle the Eurodollar system.
Mhm.
That's why Trump tried to go one way and say, "Look, let's close everything. Let's change. Let's put tariffs." Of course, he's still doing that, but he's seen that if he went too aggressively, the bond market would punish him and
Collapse.
collapse. It cannot, and this is actually a blessing because Scott Bessent is actually the first guy who understand actually much better than I do what I'm just describing to you here in this video. He
Mm.
knows how it works, and but he cannot just go on TV and say, "Look, we need to save repo or whatever," but we need everybody else to keep servicing the debt. We need demand for bonds. And this is also a play that the US, just so you see how it evolves over time. They ban CBDCs in the US through a bill, but at the same time they passed the Genius Act, which creates a
Mm.
whole new. I mean, You can use stable coins. We're going to regulate that. That's great for America. That's going to provide a lot of liquidity 24/7 for dollars everywhere. And it's as good for dollarization. At the same time, we're going to regulate them as long as you're able to freeze them or undo a
Mm,
transaction, right?
mm.
So that's CBDC all over again.
Yes,
However, the main interest here is that what is happening right now is a dollarization process. If you're a Nigerian who is unbanked and you cannot have your own account, they're happy to open an account and just have USDT, for example. That is currently happening. But they want to make sure that the backing for that is exactly like a euro dollar system 2.0 by
because they want
creating
to sell their
demand
debt.
into bonds. So you need
Yeah.
to have bonds if you want to be regulated in the United States as a stablecoin issuer. So
Yeah,
this
there is
creates a
an old
whole new system. It just gets, different every time. It's an organic growth.
Bitcoin saying. It says Bitcoin will first improve the dollar before it destroys it. So I think that's the perfect example. I think personally, Renault, I think Bitcoin could trade at $10 million a coin, and we would still have a fully functioning dollar, and
It definitely could. It
everything would be fine. It's like there is so much liquidity in alternative assets. Like when I say alternative assets, I mean anything not Bitcoin, right?
Yeah,
So in art, in gold, in real estate, in stocks, that could flow into Bitcoin, and that doesn't change the dollar. That doesn't harm the
at
dollar, not at
all.
all, right? It doesn't change anything about the dollar, right? So this is the beauty of Bitcoin. It can grow to a much, much, much larger market cap, and it would not even change anything about the dollar. Obviously, we always, I mean, I myself, I'm a medium of exchange promoter. I think Bitcoin is money. I think Bitcoin should be used as money.
Could
But
be. Could eventually be. Yeah.
yes, but the thing is, if you read a little bit of history, you will realize, and we're already at almost an hour, so let's wrap it
Yeah.
up.
Let's slap her up.
Very good session, by the way. I loved it. So if you read a little bit of history, you will realize that gold went through a very similar path like Bitcoin is right now. So it was first a collectible, then it became a store of value, but nobody wanted to spend it. Nobody was interested to use it as money. So they tried to get rid of all the other currencies first before they even thought of using their gold for spending, right? But in some areas, it was treated differently, right? So, and I think in Bitcoin, you can have the exact same thing. It might not be money in the United States for, I don't know, I might be completely wrong or right, I don't know. Maybe in the next 10 years, it will become a currency in the US. I doubt that. I don't think that's going to happen.
Could be legal tender. Like, I
Could
mean,
be legal
like
tender in 10
Florida,
years.
Florida just approved gold to be legal tender. But does that mean that I'm just gonna get my gold coin and go to Starbucks? It's
No.
not really. So it's a
Definitely
matter
not.
of if people are gonna use that as such or not. I try to see
Exactly.
that way.
I'm not I don't believe legal tender makes a monetary system money necessarily.
Yeah,
You
I
can
agree.
impose all kinds of rules. I mean, even in El Salvador, it is legal tender, but still in many parts of El Salvador, they don't use Bitcoin, right? So at the end, the market will decide if they will
Exactly.
use Bitcoin as a medium of exchange
100% agree.
or not, right? But
100% agree.
my point being, Renault, it could be
It could.
that in a country like, for example, Pakistan or Africa, it's already money, right? Because the currencies, as you said it, anything not the dollar will collapse before the dollar will even be
Their local
touched.
currencies have collapsed
Yes.
already, and this is happening today. So this is
Yes.
why you see. I'm just going to give you an example of somebody who used in Venezuela, for example. There was actually a guy. He provided internet services, websites before AI, and he opened a Bitcoin account, a Bitcoin wallet, private wallet, just to get paid for his services and start saving until he had, like, I don't know, at the time, 100 grand worth of Bitcoin. Then he got rid of absolutely everything, even his documentation, and went straight as a refugee to the border to Colombia, just with the passphrase into his head. And then once he passed the border, then he made a way to actually get $50 worth of income to buy a cheap Android phone and just recover his Bitcoin back and start his life over again. So
Wow.
this is happening, you know. But
Wow.
some people do with stable coins. This guy done it with Bitcoin, but he uses a store of value of everything I have. It this is more 401k and my
Yes.
way out. So this is a way out, you know.
Yes.
That
Yeah,
happened.
I mean, the reason I say that is because I see a lot of concern in the I call it the American Bitcoin community, because Americans tend to only see the world from
An American
within,
perspective.
from within their borders. You know,
You got
they don't look at
Square, Apple
Africa, they don't
Pay,
look.
Samsung Pay. Yeah, I mean, it doesn't. That's why they
Yeah.
don't care yet. It's much easier to understand the concept of everything else, especially Bitcoin, even stable coins outside of the U.S. Because you here we don't have FX risk. It's dollars. You don't care, right?
Yes.
Still, but it's a different perspective. So that's
Yeah.
why we see the effects outside of the United States first.
Yes.
These are the thermometers to see how quickly the system is actually collapsing. How many countries are not able to service the debt anymore? Let's say
Yes.
Turkey. Let's say Syria. Let's say Venezuela. Let's say Argentina is happy. There's a whole problem, but they're being saved by Scott Bessent through Fed swap lines and all of that, and not that currency to collapse. But this is a signal. So those are the signals that we try to track on our monetary
Yes.
mechanics reports. Okay.
Exactly. So let's wrap it up for today. Obviously, anybody listening, if you guys want to check out the report that Renault and the team is producing, just check out 21stcapital.com/bi, and you will see the reports that the team is producing. Magnificent content that you can read through. We are also on Substack. We just moved the reports also to Substack. So if you want to have access to these reports on Substack, go for it. And we also have valuation models, Bitcoin valuation models. We have some of them on our free accounts, but we have also premium ones. So just check it out, 21stcapital.com/bi. And thank you, Renault, for your time. Really enjoyed the conversation. And
Thanks, Jorge. It's great talking to you.
let's roll it. Let's
Yeah,
keep doing that. Okay.
for sure. For sure. See you
Take
around.
care. See
Bye,
you
guys.
around. Take care.
Take
Bye.
care.